if I'm trying to figure out what's going on tomorrow, I'm pretty certain. I don't always know what's going on tomorrow, but I have a better chance of knowing what's going on tomorrow than I have of knowing what's going on 6 months from today.
Hello, and welcome to another episode of the How to Scale a Business podcast. My name is Hector Santiesteban, and I am your host. Our special guest is Mr. Wilson Zehr. He is the CEO of Cendix, but their most popular brand is Zairmail. And so we're going to talk about, his journey and all the things that they are doing at Cendix. So, Wilson, thanks for joining us.
Thank you. Thank you for having me on. Thank you for the opportunity.
I very rudely cut you off before we hit the record button because you were about to tell me your story of how, what I'm really enjoying about where our show has gone is that we've talked to a number of people who have sort of rolled up companies or acquired companies, or they just have a different data set, or really they've, in any case, you seem to have a lot of things that you're doing, a lot of plates that you're spinning. And so I would love to hear what some of those things are and some of the key stops along the way were.
Okay. Where would you like me to start?
Wherever you think is relevant. I think you said that one of the companies that first got going was back in 1998. So I don't know if that's where it begins or if it was further back than that.
Oh, yeah. No, the Zairmail starts in 1999, actually on 9/9/99. Funny enough. That's when the EIN for Zairmail arrived from the IRS, was on that particular date, which is really strange. But in terms of my background, I have an undergraduate degree in finance with a minor in computer science. Spent 4 or 5 years as a software engineer. Really wanted to have a little more control over the direction of the organization. So went back, got my MBA, and then went into product marketing, strategic alliances, executive management, and then, became an entrepreneur. So I worked on a couple of ventures before Zairmail. But the reason why Zairmail came up is we were talking about Cendix, and Cendix is our software company.
But Wilson, why don't you tell me some of the key stops along the way in your career and then how you ended up where you're at and doing what you're doing now?
Well, anyway, so in terms of background, I have an undergraduate degree in finance with a minor in computer science. I started out my career as a software engineer for a variety of reasons. Spent 4 or 5 years just writing code, which was a lot of fun. I enjoyed it. But at some point, I decided I wanted more control over the direction, both of my career and the business itself. So I felt like I was sitting in the back seat, which I didn't like very much. So I went back and got an MBA, went into product marketing, managed a couple of product lines for a software company. And I managed our strategic relationship with a couple of big computer companies, IBM, Sun Microsystems, Digital Equipment Corporation, people like that. I went on to work at a company called Sequin Computer Corporation, which was another startup here in the Portland area. I managed our global relationship with Oracle Corporation, which is a $300 million business for them, more or less. And then did my first large-scale startup with a company called eFusion, which was basically a spinoff from Intel that was jointly funded by Intel, Microsoft, AT&T Ventures, and France Telecom. Managed to grow that one and sell it. And then we started Zairmail. And Zairmail is a distant relative of the company we're running today. We started Zairmail as on 9/9/99. The idea was to use convergence and make the postal mail fast and easy as email. A lot of the ventures I've worked on over the years are focused on convergence, looking at legacy systems and figuring out how we can, dovetail those with the power and speed of the internet to kind of improve the linkage between legacy systems and existing systems. So Zairmail, once again, we started 9/9/99. We managed to grow that. We were hit with, like a lot of people, we started pre-bubble on the internet. And then we were hit with a triple whammy, which was the dot-com meltdown. There was 9/11. And then, of course, we had in the mail industry, we had the anthrax scare, where somebody was mailing anthrax and killing postal workers. And as you can imagine, that was a chill on the mail industry. Um, but we managed to sell the company. One of our largest production partners at that point, we started Cendix, our software company, and we still provided maintenance and hosting on it. Um, Along the way, we've done a number of acquisitions. We've bought companies, we've sold companies. At some point, we got Zairmail back and put it on our new platform and turned it on, and orders started coming in. So we decided to do a little more of that. Um, and and over time, I think I've raised over $60 million in venture capital, returned a lot more to investors, worked on a lot of interesting companies, both for myself and for others. And when I'm not doing entrepreneurial ventures, in between, I teach at the university environment. So I teach usually marketing, entrepreneurship, finance, and business strategy. And so, some combination of those things keeps me busy most days.
I'd love to go back to that time. I guess it's 2001. I'm I'm in fifth grade at that time, far from my uh, entrepreneurial business owner days. Are far ahead of me at that time. But we are in a similar, at least global time of uncertainty. You can call it. You can put a bunch of different labels on it, but I'd imagine at that time there was a lot of uncertainty going around, and my curiosity for you is how did you, and I don't know what was the bigger battle, managing your that internal thermometer and the internal uh, forecast, or whether it was managing the emotions and the feelings of your investors and all of the stakeholders and such. Because I feel like a lot of business owners, at least those that are my age, this is the first time that they're going through sort of this cycle where everything seems to be, you know, just uncertain, if nothing else.
Yeah, uncertainty in the business environment. I mean, just starting a business is uncertain to begin with. Most businesses, I mean, maybe not a popular thing to say, but most businesses are not successful. Something like 90% die in the first year, another 90% the year after. I mean, so you really have to be, not only do you have to have a good plan and a good product and good execution, but you need some good fortune as well. I mean, so everything's got to kind of align. Um, for us in that time frame, we were jointly funded by Draper Fisher Jurvetson, Tier 1 California VC. They did people like Skype and eFax and stuff like that, and and Hewlett Packard. And so, and Hewlett Packard had $1 billion portfolio of internet companies at that point too. So our investors, at least at that point in time, when we started out, we had angel investors. Managing a whole group of angel investors gets a little more challenging. They have different levels of experience with investments, and the money means a lot more to them. It's not like it's not important to the bigger investors, but the bigger investors have a whole portfolio they're working through, and they're doing triage and working with a lot of portfolio companies because it's environmental in nature. Everybody's impacted. It's not just us. The fortunate thing for us is that even though in that time frame, what the investors would say was spend, 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 right? Just build revenue and spend. Don't worry about it. We got plenty of money. And so people went out and spent a lot. And then when the market fell apart and money became either very expensive or even non-existent, a lot of people were left in the lurch. But we just managed our funds responsibly, and the way we felt was responsible at that time. And we let investors know what we were doing. We had a plan, and when it fell apart, we still had funds to operate. And we, as a result of that, we were able to acquire our largest competitor, a company called eLetter. They were funded by Hummer Windblad, and they were blowing through about $20 million a quarter. And we managed to buy the business operations of that company for, a fraction of that. We acquired a company called Speed Greetings. We acquired a call center called Acacia International. The thing is, um, just to pivot for a second to strategy, business strategy, which is a topic I teach. I mean, we think about the business cycle, right? This idea that, economic growth, well, we don't always, our economy doesn't always experience economic growth, but sometimes it expands, sometimes it contracts. Hopefully the long-term cycle is up and to the right. So it continues to grow long term. But along the way, we have expansions and contractions. And so, as business owners, we have to be able to manage to that. Um, when you, of course, you'd love to be all invested and tuned and ready to go as you move into an expansion, so you can really leverage the returns that come with that. But as the expansion gets closer to its peak, um, that's when you want to be careful about spending too much in capacity and headcount, things like that, because if things turn around, you're saddled with all those costs. And even if you've structured your company so that you can peel away those costs relatively quickly, there's some emotional damage that you do to your business. I mean, when you think about layoffs and downsizing and things like that, so that's often not a healthy place to be. Um, the thing about downturns, though, or contractions, is contractions also present an opportunity. We talked about the case of e-letter, and by the way, if you type in e-letter today, you'll still go to Zairmail. I mean, we still own all those assets, but the contractions create an opportunity in that we have a lot of assets that will be underpriced, assuming we have capital, right? Assuming we have dry powder to work with. We have a number of competitors that are struggling. We have another business opportunities that we might be able to do. If we have a traditional business and we're investing in plant and equipment or things like that, that's a great time to do it. We can get deals from landlords. We can get deals from equipment suppliers. We have downtime where we can put everything together and make it work so that it's humming well when the economy comes back or when the environment comes back. So pluses and minuses. The trick for an entrepreneur or even any kind of a business, manager, senior executive, is knowing where those transitions take place. And if you think about it on the surface, you say, well, why would that be difficult, right? I mean, I could pull up the chart, I could see where the spikes are. The problem is that the definition of a downturn is well. Are you familiar with that? What would you say is the definition of a downturn?
Oh, I don't remember if it's different than the recession, but I remember it was, some certain negative points of GDP,
Yeah, exactly right. Yeah, so the formal well, I wouldn't say the formal definition. The economists have a very detailed definition, but the definition we would use in mainstream business is 2 consecutive quarters of negative GDP growth. Well, the problem with that is that it's a trailing indicator, which means I never know if I'm in a recession or a contraction until I've already been in it for 6 months. So constantly you kind of have to look at what's going on around you and guess, right? And the farther out you guess, the murkier things are, the more variability. The closer in you guess, the less good it does you. Right? If I'm trying to figure out what's going on tomorrow, I'm pretty certain. I don't always know what's going on tomorrow, but I have a better chance of knowing what's going on tomorrow than I have of knowing what's going on 6 months from today. And so, what's the right time frame to look at, and what direction am I going to go? Depending on change in the economy, it may create an opportunity for a pivot, or it may require a pivot, right? Sometimes entire industries just disappear overnight. Um, you know, th- I mean, you look out. Well, I guess this wouldn't necessarily be overnight, but think about companies. There is a couple of large companies that control most of the market for paper checks. If you want to write somebody a check, well, what's happened to that business over the last 20 years? I mean, those guys are hammered, right? And so what do? If they want to survive, they will have to find another business opportunity. Thankfully, they've got a pretty robust steady cash flow that gives them the the tools they need to try and find those opportunities. But not everybody's so lucky. I mean, think about the yellow pages, right? The internet pops up, people start doing searches, the yellow pages went away, and just like that. um,
It's a, I mean, you have some of those classic, there's the examples used to be sort of classic examples. The Kinko's. I think Kinko's got bought, but there's the classic printers that are escaping me. Right. You just mentioned one. Blockbuster is the other example. The challenge today is that I feel like those cycles seem to be, what's the word I'm looking for? They seem to be happening quicker. The back maybe 20, 30 years ago, it might take X amount of years, for that cycle to go through. Either I'm imagining that, and it's sort of imagined because of social media and all this, sort of your awareness and your attention to it. It seems like it, or perhaps more people are just in it. And so more, like you said, more businesses are failing. We're seeing some of these businesses that are coming up, popping up, having a ton of investment. And then you look around 2, 3 years later and they're nowhere to be found. And so there's so many more examples today of those types of companies that, it reminds me of, our California leadership. You're just like, where did the money go? Like it sort of evaporates. And I'm curious for you if that is a subjective perception of what's happening because of, like I said, media, social media things, or if objectively, these cycles are actually happening quicker at a quicker pace.
yeah, there's a couple of different topics there. I mean, but in general, you're right. I mean, the pace of innovation and growth has really exploded. I mean, you think about the time it took automobiles to penetrate 50% of households, and then radios, and then televisions, and then you look at something like Facebook. I mean, it exploded. I mean, it's billions of users now. I mean, so and that happened.
And then you have AI, right, which I think closes that gap even smaller, right? Which is, you look at, ChatGPT was one of the quickest apps, before it actually followed that same trend in the sense of Instagram was right before it, and then ChatGPT was the next quickly adopted app.
Yeah, the thing I struggle with Chat GPT, and you may be right about that. I haven't seen the numbers, but is it depending on who you talk to, it disrupted nothing or it disrupted everything. I mean, it's and AI in general, the definition of AI is not really clear to me at this point. I mean, because everybody's got an AI story. So, if I've got a widget, I need to make my widget AI like, or I can't get funding. So there's a lot of AI things that, as a computer scientist, I wouldn't necessarily consider to be AI. But Facebook was really specific. Uber was very specific, right? And what it does and who it displaced. Um, and so I can see those kind of applications. Um, AI, I see, is more of a kind of a horizontal tool, something that everybody can use, as opposed to, generally disruptive.
Well, I would liken it to a technology that's more akin to the internet, where what it requires is, it's like a road. It's like having a freeway. That's great, but if you don't have anywhere to go or you don't have anything to do on it, it's not as valuable as that network connectivity that happens once the airport's there and the mall's there. And now there's this value that has been created because, like you said, people have been building upon it. And so I think we'll see the the effects of that in the coming years, because we'll start to see some of these app specific stuff that allow, somebody to not have to figure out the use case. That's what I find is, if someone can't figure out why they would use it, they're not. I'm the person who's constantly tinkering and constantly looking for a better way to do everything. And so, and that's whether it's, gardening or brushing my teeth, no matter what, I want to optimize it. And so for in those instances, I've found dozens of use cases, and on the other hand, I see somebody who just and there's not to judge the mindsets, but they are good with how they're doing it, and that's great, and there's no perceived problem. Thus, they're not looking for any solutions. And I think the more specific use cases, like whether it's health trackers or you know um, I think health is going to be a big one that brings a lot of people into it. But I'm curious about some of these other. You talked about strategy, and we've talked a lot about context today. What I think is also really important to bring to this conversation is, despite all of the uncertainty, you've mentioned that there are still foundational things, timeless things, if you will, that a business owner um, can be doing despite these cycles. And so, if we sort of frame it like that, um, if you were to step outside of these cycles, what sort of other frameworks, mindsets, um, methodologies do you think are critical for a business owner who wants to scale?
Yeah, it's a great question. I mean, if I could, I want to touch on your first point. I mean, the internet's a great example. So if you think about the internet itself has been around since the 50s in one form or another. Started out in the university environment, a project funded by DARPA. Um, and what we're calling the internet today is really, was really opened up by the internet browser. But along the way, we had these foundational technologies. We had Ethernet, we had TCP/IP protocol, we had new kinds of computing systems. We had internet, access connectivity to the home and to the business. So all of these different what I would call waves of innovation or foundational innovation allowed us to get to where we are. And everybody, uses those. So if you think about the Uber example, Uber can only exist because of that smartphone and all of the software stack that's in it and all the connectivity. And so that's kind of how I look at AI, as kind of being an enabling technology for a lot of different things, assuming that we can, continue to build on the functionality that we have, as opposed to being a specific point. Um, and we could talk about portfolios later if you want. And you talked about the money evaporating, and there's some science behind that too. Or at least methodology, but we can talk a little bit more about that. In terms of businesses and the business cycle, the thing that we know is that, or at least I think we know, is that when businesses are growing and there's a lot of activity, there's a lot of things, especially with a high growth enterprise. There's a lot of things that don't get done. I mean, we just have, we have a lot to do just to keep up with the momentum, rolling out new products, responding to customer complaints or customer concerns, and adapting products and services, and which is all great. I mean, that's part of the business. But a downturn, in opposed to, or a contraction, in addition to being an opportunity to do strategic things, like look at new business opportunities or acquisitions or build, but it's also a time to clean up and to reset and to make sure that everything's working the way it needs to, get everything polished up and get ready for expansion. I mean, because we know that when we're in the process of expanding and everything's, going at 100 miles an hour, it's really hard to change the tire. It's like, so this is one of the few places we get to do it. I mean, we see it in software too. We have, if you're building software, there's always a list of things to do, and it's quite often it's bigger than you'll ever get to, and you have to prioritize and make sure the most important things get done. And sometimes along the way, you'll say, "Well, we'll come back to that. Let's just do this to get to the next step, and we'll come back. We'll come back." But a lot of times we never come back, right? I mean, it sits out there. But this is a time, creates a little window when we can go back and start thinking about some of those things. Oh, what happened with X? We thought that was important at the time. Is it still important? Do we have some more resources to put on that now? Um, so looking for new kinds of strategic alliances, business opportunities, re-examining our financials and our business statistics, and are we headed the right direction? What does all that look like? There's a lot of things that we don't always have time to do that we may have more time to do in a window like that.
Yeah, I'd love for you to share what you mentioned. You had some thoughts about money evaporating and such like that. Uh, I doubt that it's about what's going on over here in California and where all that money has gone. But what do you know about how businesses are utilizing their funds, and why that trend might be so apparent.
It really depends on the kind of business and the source of the funds too. We talk a lot about, and when I teach entrepreneurship, we talk about funding a business and stage of development and where those funds are most likely to come from. Early stage business, friends and family tends to be pretty dominant. Personal savings are friends and family, and then maybe you move into a stage of an angel investor, but for a large high growth enterprise with some marquee quality leadership, oftentimes they'll just go straight to VC. Um, and then large established enterprise, they're playing a different game, right? They've got a set of investors that they need to produce returns for and show growth for, and the investors need to see progress. And but if we just take that middle slice, the venture capital industry, right now, I mean, at the time when we first started Zairmail, the venture capital industry was big, but nowhere near the size it is today. I mean, people are raising billion-dollar funds all of the time. I mean, that was an incredibly large fund back at that time. Now people do it all the time, um, and if you're thinking about venture capital, even professional investors, most of those companies fail, right? So if probably 1 in 10 is a winner, and there's probably a couple that'll maybe you'll get some of your investment out of, or maybe even money on, and the rest is just lost. But if you have $1 billion portfolio, you can't. It's harder to make a $10 million kind of investment. You have to invest big because you can't manage thousands of portfolio companies. So you're investing big, and you have to hope for a home run. Think about a scenario where you have 100 million to invest. You invest, 10 companies, and I just said, if you had $1 billion portfolio, you couldn't do that. But for this example, you invest in $10 million each in 10 companies, knowing that 9 of them, let's take an example. So, 7 of them will fail, 2 of them will be even money. You need that last one to be a home run. It needs to produce 100 times returns to get the kind of IRR your investors want. So that 70 million is probably gone, right? I mean, it's spent on the startup and hiring people, but ultimately you won't get to a liquidity event, and so that money's gone. Maybe you get to even money on the other 20, but you're hoping for the upside on the other smaller piece. So when you take that example and blow it up on a bigger scale, you can see how a lot of money would just disappear. I mean, appear to disappear. But the investors are really the venture fund is really betting on the portfolio, the return of the portfolio, not the return of the individual companies within the portfolio, because they don't know. I mean, they'll invest in those guys expecting, I mean, from a fiduciary standpoint, they have to believe each of those companies will be successful, but experiences tells them that they won't. So they have to manage their fund appropriately.
This has been such a great conversation, and I'm sure you have. Well, I'm sure hours and hours of lectures that you can do on this. So perhaps we'll have you back for another appearance. I got to 2 questions for you. The first one is, Wilson, if people want to follow up with you, go deeper in your world, get more connected, where's the best place for people to go?
Yeah, I'm on LinkedIn. www.linkedin.com/in/Wilson Zehr. My academic portfolio is out there at wilsonzehr.com. You can see them at Cendix and Zairmail, and Zairmail's got an 800 number, 888-898-0066. unlike a lot of our competitors, we love to talk to our customers. You won't talk to somebody in a call center offshore somewhere. You'll get directly to one of us, and we'd be happy to talk about whatever you want to do. Whether you need advice or help, or you'd like to do business with us, we're open to any or all of those.
I love that. Um, that's great. Hopefully the internet is nice to you. Wilson, last question here. In your opinion, what is the secret to scaling a business?
The secret to which?
Scaling a business.
I don't know that there is one silver bullet or one secret. I mean, of course, the number one the number one point of failure for most small businesses or most businesses is they just run out of capital. So we usually tell people just don't run out of capital. That's first. But beyond that, I mean, you need a good team. You need a good idea. You need to be committed. You have to be, in my opinion, looking for something more than just the money. I mean, there's a lot of people look at somebody like Elon Musk and say, if that guy can make billions, I can too. So I'm going to do a startup to make billions. But it can't be. The money can be a great scorecard, but it can't be, or it shouldn't be, the primary motivator. Right? The primary motivator is to change the world, is to take something that you're passionate about and use it to bring about change. And if you can do that, all the good stuff usually follows. The guys at Hewlett Packard who started Hewlett Packard, they had a saying like that too. They would said, we're just going to focus on solving, using engineering to solve cool real world problems. And if we're really good at that, the money will come. We're not worried about that.